everyone. Welcome to DIY Bookkeeping. We are on episode 17. This is the most important episode that you need to be tuning in for. Uh, this has the potential to save you hundreds of thousands of dollars, as well as keeping your business out of risk of losing the business. So we don't want that for you. As always, you need to enable the StreamYard. So please go to the three dots on the bottom right-hand screen, of the video, and enable StreamYard so that I can see who is commenting. I do hope that I get comments in this today because I know there's going to be a lot of questions. This is a very, very extensive video today, and we're going to be going over a lot of really complicated stuff. And I know that some of you are not going to understand. So please, 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 I beg you, please ask away. I will answer all the questions that I can. Obviously, if we run out of time, then I will do my best to answer your questions afterwards. This session will probably end up going about probably pretty close to an hour. I'll try to make it as close to a half hour as I can, but I don't know if that's going to be possible. So again, please enable StreamYard because that enables me to see you. It allows me to see who is commenting. As always, I'm always telling everyone why I do this. So there are two reasons. The number one reason is small business owners. Right now with COVID, since last March, so many people have been laid off. Companies have had to shut their doors. Others have had to make some pretty major modifications in order to stay open. And so because of this, many small business owners may not be able to afford a bookkeeper in order to maintain all of their books. And so that's why I'm doing this. I don't want you to fail. I want you to know what the financial health of your business is. That is so important for you because that will determine whether you're making money or not and how much you're spending in expenses every single day, month, quarter, and year. And you need to know what it is that you're doing because looking at your bank account doesn't cut it because it takes things time to clear, especially when you write by checks, which I think most people have probably gotten out of. But the other reason is because I am now helping bookkeepers, both brand new bookkeepers as well as bookkeepers that are new-ish and own businesses already, and just giving them that push that they need and giving them the knowledge that they need in order to get through tasks, in order to get through scenarios and to gain their confidence. And these videos are also very important for them to be watching because this video tonight, for instance, is definitely not something that they would have ever thought that they were going to be getting a lesson in. So I'll tell you now that the most important industry to be watching this right now is the construction industry. If you are a bookkeeper that's trying to get into the industry or just started in this industry, then please watch because this is probably going to be the number one thing that you are going to have to pay attention to. So most bookkeepers that didn't know anything about this are not going to know that this is something that they need to talk with their business owners about. So, as always, we do a little bit of a review. And let me share my screen. Last Thursday, we were talking about the last of the reporting portion of our videos. We were going over collections, also known as the accounts receivable aging report. So, again, in the sample company, you go to reports. And again, I apologize because it takes it longer for QuickBooks Online to do anything because I'm doing the live video. You come down here to sales and customer, and you want to go to, I believe it's, oh, my mind is on the lesson and not so much on the accounts receivable right now. Here we go. That's why I couldn't find it. Who owes you? So remember that you're going to go into open invoices. You can change the date. You can change the date as of, let's just say, December 31st. And you are looking for anybody that owes you money. More specifically, you're looking for anybody that owes you money that is greater than 30 days. So most companies will have net terms of net 30, which means that once you mail out the invoice, they have 30 days to pay. It is not 30 days from the moment that they receive the invoice. It's from when you mail it because, as always, mail can lag. So if you see anything like this right here, of course, this is as of January 12th, you have November 29th. So this is actually about 65 days. So these are the people that you're going to pay attention to. This is your collections report. This is how you know who you need to call and ask, hey, where's my money? In a very polite way. You are not in the business of collecting debts on a credit card or anything like that for a consumer. So I would certainly hate to hear that anyone that has learned anything off of me has thought, oh, I need to go as aggressive as possible, because that's not at all what I am saying. Do not go aggressive. So try to be polite. Again, what I was told a long time ago was I had the ability of telling someone off without actually telling them off. So you can be aggressive without actually being aggressive, if that makes any sense. So that's just a brief review on accounts receivable. So let's go on ahead and do that. And let's get into the meat and potatoes. If you have a pen and paper with you, that would be very, very handy for you right now. I would recommend that you take notes, screenshots even if you can. So today we're going over workers' compensation. Why is it so important? Now, I know most of you probably think workers' compensation, it is so boring. I know it is. So at least that's what I thought when I learned about workers' compensation. It was the furthest thing from what I wanted to learn. But you know what? It turned out that because of an experience that I had, it became one of the most important things that I had to do, that I had to provide the company that I was working for. And every single construction company, every company that I work with now as a client, I'm really pressing on all of this, especially if they are a construction company. They are who we're focusing on right now. So, because the construction industry far outweighs in comparison to all other industries when it comes to workers' comp. And we'll get into that in a few minutes. So, what is workers' comp? Workers' comp is a type of business insurance that provides benefits to employees who suffer work-related injuries or illnesses. Specifically, this insurance helps pay for medical care, wages from lost work time, and more. Why should you, as a business owner, have it? Employers should carry workers' comp insurance because if someone gets injured on the job, this insurance covers them, reducing your liability. If you don't have workers' comp insurance and an employee gets injured on the job, you open yourself up to massive lawsuits and could potentially lose your business. Now, I'll tell you that workers' compensation laws are different in every state. For instance, in California, where we lived for a very, very long time, it is illegal to have a business and not have workers' comp insurance. You were required, every single business, no matter how big or small it was, unless you were the only employee. If the owner was an owner operator and you didn't have any employees, you didn't have to carry workers' compensation. If you had one employee, you had to carry it. Here in Texas, however, it is not required, and it just baffles me to no end. You are not required to hold workers' compensation insurance here unless you have a government employee or government contractor on site. That's the only requirement. So could you imagine being a construction company, being one of the industries with the highest injury rates in the US, opening yourself up for that kind of risk? Yeah, I certainly hope any future clients that I work with that are in the construction industry does not listen to that and gets workers' comp, because I guarantee you that they are opening themselves up for huge lawsuits and the possibility of even losing their company. So these are the top 10 most dangerous injuries with deaths per 100,000 workers. Logging is at the very top of the list with 97.6 deaths per 100,000. Number 2 is fishing, followed by aircraft pilots and flight engineers, roofers, trash and recycling material collectors, truck drivers, agricultural, iron and steel workers. Number 9 is construction, and 10 is landscaping. Now, I'm sure you can imagine my surprise when I saw that construction was actually number 9 on the top 10 list. I mean, honestly, I thought that it was up there in the top 5, but I digress. So, what industries are at greater risk of loss? Industries like logging, fishing, aircraft pilots and flight engineers, and roofing, yeah, they're at pretty high risk of loss. And when I say loss, I mean injuries and deaths. Although they're at the top 4 industries for workplace injuries and deaths, the reporting is fairly simple. Even though the construction industry is number 9 on the top 10 list for workplace injuries and deaths, the construction industry has one of the highest insurance loss rates in the company. I'll explain more in detail why this is on the next slide. Excuse me. Now we're talking about loss mitigation. What is it? So, loss mitigation, specifically workers' comp loss mitigation, is the act of reducing direct costs, including indemnity, which is lost wages, uh, indemnity benefits, and medical benefits, as well as indirect costs associated with claims that can be 3 to 5 times the total direct claim costs, such as overtime salaries, reduced productivity, hiring and training, and work coverage. So, obviously, when somebody gets injured on the job, somebody has to cover for them, whether it is hiring another employee to cover for them in their absence, taking all of the current employees and making them all work overtime. Uh, you've got to have work coverage. There's no ifs, ands, or buts around that. There's just no way around it. You have to have work coverage. Otherwise, you're shorthanded, and we all know what happens when people get tired on the job and you've got construction workers trying to hammer nails and they're standing on roofs and decks and everything else. But see, that's not all. There's one more indirect cost that most companies don't think about until it's too late, and that's reporting. Reporting is the most overlooked reason why companies lose upwards of $100,000 in 1 year. Why? Because the owner and or employee doesn't understand how they're required to handle the monthly reporting. Yes, I said 100,000. So now we're getting into a lot more of the reporting and why this is so important. Workers' compensation, certified payroll reporting in construction. So, what is certified payroll reporting? It's a detailed record that records hours worked, the wages paid to each employee, and the jobs those employees performed. Now, most of the time, when you hear about a certified payroll, you're going to think of, I don't even remember the word for it right now. It's a specific payroll that you're paying out for government jobs. And for each of those jobs, you actually have to submit a certified payroll to each one of them in order to get paid. You are essentially proving to them what you've done on the job thus far. Prevailing wage. This is not prevailing wage. So, how is this collected? Each payroll period, you're required to collect data from each employee. This includes total hours worked, each task each employee performed while on the job, and the length of each task. The more detail, the better. The easiest way to go about this is when you're doing payroll. When they turn in their time cards, you're going to collect all of the information from those time cards or from T-sheets or whatever software or way you're handling the payroll. But it's best that they also fill out something called a job form or a job detail form. And not only does this help with billing in order to ensure that you are giving the customers the most information about what was done, as well as knowing who gets billed, but you're using this to determine how much time was spent doing what. And that's what you need. That's the most important piece of information for this. But why do the tasks matter? So, and of course, it doesn't want to actually backspace. It wants to, yeah. Here we go. Remember, I said on the very bottom of there, length of each task, the more detail, the better. But why do the tasks matter? Workers' compensation estimates how much you'll pay out in payroll each year based off of how much you paid the previous year. Most of the time this fluctuates. Sometimes it can fluctuate greatly. In other words, workers' comp, when you sign up with them, they're going to ask you, how much did you spend in payroll last year? You're going to look this up because you've got all of this information in your QuickBooks. It's going to be the easiest way that you find it, and the quickest by far. And what's going to happen is you're going to give them that total number. They're going to ask you by every single job code, and they'll tell you what each one is, but they'll ask you every single job code how much money was spent the previous year in each one of those. And from all of that information, workers' comp will put together a package of your coverage, and they'll say, okay, well, this is all based off of the numbers from the previous year. We're estimating that you're going to pay out roughly the same amount this year. That doesn't take into any considerations of COVID, obviously, or layoffs, injuries, sickness, anything like that. If you shut down half of your company, it doesn't take that into consideration. There are no considerations when it comes to this. It's just an estimate. It's up to you to give the actuals. Now, some companies will just have you pay out a monthly fee. I don't agree with it at all, especially for most industries, it's fine. It's fine for most industries because most industries, as you'll see in the next couple of screens, their industries are much more beneficial when it comes to job codes. And we'll get into job codes here, as you can see here, but on this slide. But the construction industry is definitely not one where you should be paying a monthly fee based off of their estimate. This is something that you should be reporting every single month because you want everything to be accurate. You don't want to be paying everything off of an estimate, and then at the end of the year, they say, okay, now go on ahead and send us all of your payroll reports and tell us how much you spent in payroll, and now you're going to owe us a balloon payment every single year. It doesn't work that way. The best way is to work off of actuals and report it every single month. So you must report your certified, and this is again for the company that will actually allow you to do everything per actuals. You must report your certified payroll each month and keep detailed records in order to report correctly. Even if you are working with the company that does everything based off of estimates and not actuals, I highly recommend that you still keep detailed records and a detailed spreadsheet so that you know how much was spent and keep a comparison so that you are not caught off guard if they do an audit. Most industries have a handful of what's called workers' comp job codes. And when I say most industries have a handful of them, that's exactly what I mean. That most industries will only have up to like a dozen different job codes. It's very simple. For them, it's okay to base things off of estimates because there's very little fluctuation. In the construction industry, these roles I skipped one. These codes signify each role a person holds in a company. For most industries, the roles are just that their titles. It's your job title. So, for instance, for nonprofit, if you're specifically a church, you're only going to have three titles, three roles, or three job codes. You're going to have um, your pastoral staff, you're going to have your office staff, and then you might have janitorial if you have someone on staff, or you might have teachers if you have a school. So, in the construction industry, these roles are actually tasks. 100 tasks can be performed by one person. They need to ensure that each employee is covered no matter the job they're performing at the time of the injury. Most construction companies will go through workers' comp audits every 1 to 3 years. A workers' comp audit is when they send a third-party company to come in and actually look through all of your payroll records. They will look through time cards to ensure that they have been filled out correctly, that they include lunch breaks, and they want to look at 1 to 2 people from every single job code that you have on your list. And it's them doing that comparison to see if you actually paid what you claimed you actually paid out in payroll. This is due to the high risk in their industry. It could be more if there were a lot of claims in previous years. So if you have more claims, you're going to have more audits. Less claims, less audits. However, if you're in the construction industry, I guarantee that you will have an audit every 1 to 3 years. With less claims, it's going to be closer to the 2 or 3 mark. If each payroll was calculated correctly based off of the jobs each employee was performing per their reports, when an audit is done, you, the owner, may actually receive a refund. They may have actually estimated more than what you actually spent. And if that's the case, then you would get a refund check at the end of your term. And it's not calendar year, but the anniversary date of when you started your workers' comp insurance. If you report your certified payroll incorrectly each month and a workers' comp audit is done, I'm sorry to say that you're in for a very, very rude awakening. And I'll share an example with you. I worked for a construction company a long time ago that had several people in their office. And they didn't understand how to report their payroll to workers' comp. Instead of doing the math and putting everyone in their respective workers' comp job codes, these individuals placed each construction worker under admin. Now you can figure, admin is the least expensive job code that they have because the risk to injury for admin is extremely slim. The biggest injury we may get is a paper cut. So to put that into perspective, an admin job code may only be roughly 80 cents. And I'll get into the calculations here in a little bit. A laborer who is laying down pavers, that may be $23. So 80 cents versus $23. So you can imagine what happened. They thought they were doing great by only paying roughly $250 to $500 a month for 25 to 30 employees. Then they had a workers' comp audit, and it covered 2 full years. The auditor discovered what was happening and had to do all of the correct calculations. What should the company have paid during those 2 years versus what they actually paid? In the end, the company received 2 years' worth of back workers' comp fees and fines totaling around $75,000, and that was a lump sum payment. The year after that, because it was a carryover, it lasted 3 years, they owed an additional 15 grand. Total loss was a whopping $90,000. Thankfully, they were able to get them to be a little bit understanding, and they did payments, but those payments were only for a few months. I believe it was a total of 6 months. They had to pay back $90,000 in 6 months. So you can only imagine how hefty those monthly prices were that they were having, or those monthly bills were that they were having to shell out. You see, most industries only have a handful of workers' comp job codes, as I was saying. Construction companies can have as many as 250 or more job codes. I'll repeat that. Construction companies can have as many as 250 or more workers' comp job codes. That means each job code needs to be changed every single day, depending on what each employee does. And it's not even per day, it's per hour. So if an employee changed what he or she was doing 8 times in an 8-hour period, the job code has just changed 8 times. This is why what the employees give you is so important, because that tells you how many times they switched jobs or tasks. So I actually took this off of my website, off of my blog, and I'll share my blog with you on the next page. And this is a very detailed calculation. It'll probably have your head spinning, honestly. Putting it in a spreadsheet and actually doing it is a lot more different than actually typing it out. So Joe Schmo worked 40 hours on an excavator, and I actually took all of the job codes and the prices off of the Texas state website. So these are the actual rates for Texas. So you can figure here in Texas, these are about, I'd say the rates here are roughly half of what they actually, they're more than half less than what they are in California. So Joe Schmo worked 40 hours on an excavator for 1 week. I'm going to leave out the codes and the prices. 20 hours laying concrete and 20 hours laying pavement. For week 2, he worked 40 hours doing a fence installation. For week 3, 40 hours in masonry. For week 4. This is how it's all calculated right here. So you've got your 40 hours right here, plus another 40 hours. That gives you $1,600. That is their gross wage, regardless of what they did. That is their gross wage. Now you break it down. You did 40 hours, happens to be the same thing. Yeah. And so that's $800. So this is your entire breakdown right here. The total amount due for the entire month, just for Joe, is $621.20. Now you figure if he worked, it's what, 3,200 hours for the week, I think? I don't know. You can figure that if you're calculating them at 80 cents per 100 or per 100 hours worked, sorry, $100 paid. See, it's still even a little bit confusing to me. Um, you can figure that you probably just only paid $75. But that is what you actually have to pay for the month, just for that one employee. So calculate it out. That's $621.20 that you must pay the insurance company to have that employee do those jobs for the month. It sounds complicated, but if you have your spreadsheet set up with the correct formulas, it's as simple as putting in their basic payroll information, and the formulas do all the calculating for you. That way, when you go to report your certified payroll, both the reporting on the website and your spreadsheet should be the same, so you'll always know exactly how much you owe. And when I say spreadsheet, I mean you actually spell it out. You list every single employee, what their job title is, or better yet, what the job code is. And if they've had to switch, then you move them down for that many hours. So you keep them on that one job code, you add another job code and you put them there. And that's for that total amount of hours. And when you apply the calculations from Excel into that, it does all of the calculating for you. So basically what it is it is the total amount that you paid them, divided by 100. So for every $100, total amount you paid them divided by 100, and you multiply the amount of that job code, that dollar amount. And that is how you get how much is owed for that person for every $100 spent. And that's what I was telling you about the spreadsheet. So here's my website. This is my blog, and this is where you can find it. I've got the calculations there. I've got everything broken down. It is a very lengthy blog post. You can take as long as you need to read it. And obviously, if you have any questions, please message me. Please ask away, and I will answer to my best ability. So to get to my blog, go to www.misselseasbookkeeping.com/workers_risks_loss_mitigation. So it's workers' comp risks and loss mitigation. It's easier if you just go to my website, misselseasbookkeeping.com, and click on blog. It's the very first one. So that's it. We were able to keep it closer to the half-hour mark. But as you can see, it is extremely important for you to understand this, because I certainly do not want you to have to shell out $100,000 or more, depending on the size of your company. And I certainly don't want you to lose your company because you have had to shell out so much money. I would much rather you know exactly how much you should be spending and either break even or get a refund if they happen to do a workers' comp audit. So again, if you have any questions after all of this, then please message me and I will ask them to the best, or answer them to the best of my abilities. Tomorrow we are going over, and now we've got a bit of a trend going. Tomorrow we're going over payroll. Do it yourself or hire a third-party payroll company. When to know which one you need to do. So tune in tomorrow at 7 p.m. Central Standard Time. And I promise we will keep it at the 30-minute mark on our bout. And I hope to see all of you there. I hope you have a wonderful evening. Good night.